Hey everyone, it's Matt Donaghue with Mission Financial Planners. This is your weekly update for the week ending November 10th. I was off for Veterans Day yesterday, so you veterans out there who are like me, happy Veterans Day. I hope you're able to spend some time, celebrating a little bit. So I was able to go to one of my kids' schools, see their Veterans Day program. And then I spent the afternoon putting up shower curtain rods. So I celebrated in fine fashion. Let's start with Marcus Aurelius. So in this week's post, if you check it out on our website, you'll see that Marcus Aurelius wrote about previous emperors. And what he was getting at wasn't like trying to compare himself to those emperors. He was just saying, if you go back 50 years, people had the same basic concerns 50 years ago that they have today. Go back 100 years, same basic concerns that they had today. Has technology changed? Sure. Have ideas about how the world should be? Absolutely. But the point is the basic needs. Did someone get sick? Is someone recovering from something? Did someone get married? Did someone get divorced? Did someone die? Was someone born? All these things are still happening all the time. And they should be celebrated, or as a Stoic would say, take them as they come, because the only thing you can control is how you react to the things that happen around you. What the 5 pillars of financial freedom are all about. How does your plan keep you grounded no matter what is happening around you? So let's jump into the market. According to some of the latest data, the labor market is cooling. ADP reported a gain of 42,000 private payroll jobs in October. That is a mild rebound from the previous month's decline, but consumer sentiment fell to 50.3. That is the second lowest in 4 years. And layoffs hit their highest level for September and October combined since 2008. At the same time, the Chicago Fed's real-time unemployment estimate rose to 4.4%, and many analysts expect another rate cut from the Fed in December. So what does all this mean for investors? It means we're seeing a shift from rapid expansion to balance. Inflation is easing, productivity remains strong, and markets are recalibrating to a more sustainable pace. And this is exactly why discipline matters. Do not chase headlines. Stay focused on your long-term strategy. The investment pillar that we lean on is built on patience, diversification, and matching risk to time horizon. We are not trying to guess the next move from the Fed. Shifting to tax planning, or the tax pillar. Recent years have reminded us that storms, literal and financial, can hit anyone, anywhere. Hurricanes, wildfires, floods, other disasters have created tremendous losses across the country. Fortunately, the Disaster Tax Relief Act, which was passed quite a few years ago now, does provide real help for families who suffered property damage or financial hardship. If you experience a loss, say from a storm, fire, theft, or wreck, document it carefully. File a claim with your insurer, calculate the unreimbursed amount, and report it as a casualty loss on IRS Form 4684. If your loss occurred in a federally declared disaster area, you may even amend your prior year's return using Form 1040X to receive an immediate refund. You can also withdraw funds from your retirement account for recovery without facing the 10% early withdrawal penalty. These aren't loopholes. They are lifelines designed to help restore some stability for you when life turns upside down. For high-income households, some smart tax strategy might go beyond disaster relief, charitable giving, Roth conversions, loss harvesting. All those things, of course, can help manage brackets and build long-term flexibility. Remember, our tax pillar is not about avoiding taxes. It's about controlling what you can control, turning chaos into order and making every dollar serve your goals. Now let's talk about the insurance pillar and specifically extended care planning. More than 50 million Americans are caregivers today. Over a third are caring for someone over 50, and millions more are supporting loved ones with dementia or chronic illnesses. This kind of care takes an emotional, physical, and financial toll on the caregiver. Without a plan, it can disrupt that caregiver's retirement and their financial plan within just a matter of months. Extended care planning, what we used to call long-term care, isn't about nursing homes. It's about protecting your family from hardship. It's about maintaining independence, dignity, and security when your health changes. Building a plan early allows you to choose how you're going to fund the care, who will help manage it, and how it affects your retirement and estate goals. Hybrid life and long-term care policies can provide living benefits and legacy value, turning a potential crisis into a manageable transition. In this case, guys, preparation is not pessimism. I actually would say it's love in action. So whether we're talking about markets, taxes, extended care, the message is the same. preparation always beats prediction. Marcus Aurelius said, the earth abides forever. If we have any Big Lebowski fans out there, the dude abides, right? But we are going to come and go. What lasts is the structure we build and the legacy we leave. Now, before the end of the year, make sure you check out your last chance planning checklist. You should have got an email with that last week. You should get it in the mail later this week, early next week. But review your plan. Those 5 pillars: income, investments, insurance, tax, and estate. Make sure you're aligned. Make sure they're working together, and make sure you're ready for what might come next. Thanks for watching. And as always, if you'd like help reviewing your plan, reach out, right? Give us a call, give me a call. We're happy to stay prepared, or happy to help you stay prepared, protected, and confident in every season. Thanks again, everyone. Happy Veterans Day to you veterans out there. We'll see you next week.